What if I told you that you could start building wealth today, even if you know nothing about the stock market? Sounds crazy, right? Well, stick around because, in the next 20 minutes, I'm going to break down the stock market in the simplest way possible. By the end of this video, you'll know exactly how to get started, what mistakes to avoid, and how to make your money work for you. So if you've ever felt overwhelmed by investing, don't worry. I've got you. Let's get into it. Section 1. What is the stock market? Alright, first things first. What is the stock market? Think of it as a giant marketplace where people buy and sell ownership in companies. These ownership pieces are called stocks or shares. When you buy a stock, you own a small part of that company, and when the company grows, so does the value of your investment. Sounds simple, right? Because it is. Now, you might have heard terms like the New York Stock Exchange, NYSE, or the NASDAQ. These are major stock exchanges where companies list their stocks for trading. Investors worldwide participate in buying and selling stocks on these platforms every single day. Section 2. Why should you invest? Now you might be thinking, why should I even care about investing? Well, let me ask you this. Do you want your money to just sit in a bank account collecting dust, or do you want it to grow while you sleep? The stock market has historically been one of the best ways to build wealth over time. Just look at companies like Apple, Amazon, or Tesla. If you had invested just a few $100s years ago, you'd have thousands, even millions today. Beyond wealth building, investing is also crucial for beating inflation. Inflation eats away at the value of money over time, meaning the $100 you have today won't buy as much in the future. Investing allows your money to outpace inflation and retain its purchasing power. Section 3. How does it work? Okay, so how does the stock market actually work? Here's the deal. It's all about supply and demand. When more people want a stock, the price goes up. When fewer people want it, the price goes down. Simple, right? But here's where things get interesting. There are different types of stocks. 1. Blue chip stocks. Big, well-established companies with strong performance history, e.g. Microsoft, Coca-Cola. 2. Growth stocks. Companies that are expected to grow rapidly, e.g. Tesla, Nvidia. 3. Dividend stocks. Companies that pay shareholders a portion of profits regularly, e.g. Johnson & Johnson, Procter & Gamble. 4. Penny stocks. High-risk stocks of small companies that trade at low prices. 5. ETFs, exchange-traded funds. A collection of stocks bundled together for diversification. Another key factor? Market indices. The stock market is tracked using indices like the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite. These indices help us measure how the market is performing overall. Section 4. How to start investing. Alright, now the part you've been waiting for. How to start investing today. Let's break it down into 5 simple steps. 1. Step 1. Set up a brokerage account. You'll need an account to buy and sell stocks. There are plenty of great apps out there like mentioned popular brokerage apps. 2. Step 2. Decide your budget. Start with as little as $100. Investing isn't about having a lot of money, it's about consistency. 3. Step 3. Pick your stocks or ETFs. Want a safer option? Go for ETFs. They're like a basket of stocks, so you're not putting all your eggs in one basket. 4. Step 4. Make your first investment. Click that buy button and boom, you're officially an investor. 5. Step 5. Hold and be patient. The stock market isn't a get-rich-quick scheme. The key to success? Long-term investing. Bonus tip, use dollar-cost averaging, DCA. This means investing a fixed amount regularly, regardless of the stock price. It helps smooth out market fluctuations and lowers your overall cost. Section 5. Common mistakes to avoid. Now let's talk about what not to do. I see beginners making these mistakes all the time, and I don't want you to be one of them. 1. Panic selling. The market goes up and down. Don't sell just because prices drop. Stay patient. 2. Investing without research. Always research a company before you invest. Never invest blindly. 3. Putting all money in one stock. Diversify your investments to lower risk. 4. Trying to time the market. No one can predict the perfect time to buy or sell. Focus on long-term growth. 5. Ignoring fees. Watch out for brokerage fees and hidden costs. And don't fall for hype. Just because a stock is trending doesn't mean it's a smart investment. Always do your own analysis. Section 6. Power of compounding and final motivation. Here's the best part, compounding. This is how the rich get richer. If you reinvest your earnings, your money grows exponentially over time. Imagine investing just $100 a month. In 30 years, with an average market return, you could have over $200,000. It's like planting a tree, small at first, but over time, it grows into something massive. And remember, investing is a marathon, not a sprint. The key is patience, consistency, and financial literacy. Keep learning, keep investing, and you'll set yourself up for financial success. And there you have it, stock market basics for beginners. Investing might seem complicated, but once you break it down, it's actually pretty simple. Now, I want to hear from you. What's the first stock you're going to invest in? Drop a comment below. And if you found this video helpful, smash that like button, subscribe for more investing tips, and hit that notification bell so you never miss a new video. Thanks for watching, and I'll see you in the next one.